if you don't know all the areas and know how to manage the different type of assets, you're going to drown.
I'm just wondering, do we want to double down on what we know, which is the long term and the short term, or is it better to be diversified across many different asset classes? Should we be buying C class, B class, A class? Do we want to have a great breadth and cast the net wide, or is it better to just specialize and dig into where your, unique capabilities are?
And that's a good question, and it's such a hard question to answer. It depends on the personality, and it depends on what goals you have for your portfolio, right? If you have a team that is able to multitask and understand all the different markets, and you want to spread your investment into different assets, you better know each asset class really well and know how to maximize your investment for the fullest. You can't learn A, B, C, D and know all the areas and know everything. Now, if you have a team and they're able to really, okay, you're going to concentrate on the A, you're going to concentrate on the B, you're going to concentrate on the C, you're going to have this region, you're going to have that region, then it's a different story. But you can't run a multifamily apartment building like you run a shopping center. You're not going to run a multifamily like you run a medical office building, a store. They're all so different, and they have such investment theses are so different. So you can't just say, I want to put my eggs in all basket and not put it in one.
Yeah.
Because you
get
don't
too distracted
know.
and not know. Yeah.
Exactly. If you don't know all the areas and know how to manage the different type of assets, you're going to drown. So it's, again, we like to niche on apartment buildings, multifamily. We're niching from 250 up. And right now we're only doing B plus to A. We don't go to the luxury. We don't go to A luxury. We go to A plus, where it's the nice buildings, new, but not luxury.
What is the
different assets?
Okay. Yeah. So you had mentioned before that before you were doing C class properties, and that is very much the space that we're in now. And I'm interested in stepping up towards investing more in B and A class. What are the pros and cons of those different classes?
So the pros, I would have to say that the tenant base is able to sustain and absorb the rent increases on a yearly basis, right? The demand that you have in the C class is huge, right? Because there's very little supply on the C asset class. So the demand there is always there, but you can't increase the rents. The demand in B and A are there, but the supply is abundant, right? So you have to really be in a good location, that you keep your assets in good shape, and that you know how to manage your properties. So those are my pros and cons for C compared to A and B.
Yeah, amazing. And as you look into different markets, are you looking primarily in secondary markets? Do you go for the Austin, Dallas, Nashville?
Oh yeah, we do. We're right now in El Paso, in Texas. We're in Tennessee. We're in East Nashville. In Fort Lauderdale, we're in secondary market. We're in Tamarack, Coral Springs, Naples. So I mean, if we look at the asset and what is that property, if we're buying existing, what that asset has done in the past 10 years, what's going on 5 mile radius around the building. So, we right now, we are at a point that we have an asset management, we have an acquisition manager, so we have an accountant department that they all collaborate and like, hey, we're looking at this building and now we do the analysis, underwrite it, so it's a bigger team at the moment. When we were doing what we were doing, me and my husband, we would just really study the location, really study what we could do with that building. How are they manage it compared to the way that we're going to manage it? So it was just really just knowing that we had the tenacity and the perseverance that we weren't going to let it fail. And that's hard, and that we understood investment,
Yeah.
right? So we're not going to stick in too much money or put a little bit of money, right? You have to like really balance that out on a unit so that you could really get the cash flow that you need from the property.